In this short video, I'm going to talk about the state of my deep value investing at the moment, some simple tools I use, and then maybe a bit of an outlook to the future. At the moment, I'm quite literally only 2 or 3 weeks into my journey. I've read a few books, of course, Intelligent Investor being one of them. We all watched the GameStop occurrence, let's call it. So, watch quite a lot of DFV's videos as well on YouTube. Just looking to get a sense of how to pick these companies that aren't, let's say, valuable the rest of the marketplace, but still have some level of value left in them. Okay, so I use a kind of standard Google sheet. It's really, really basic at the moment. As I learn more, I'll build it out. Just got a list of tickers, obviously names, Google Finance profiles, just for quick reference. So this one's Rent the Runway, trades on the Nasdaq. Starts with the profile page. I mostly keep it here, so when I want to add them, I can just grab the industry and sectors and drop them straight into these columns here. Obviously, the charts are really easily accessible, as are the financials. I'd love to have that set to 5 years, but I can't seem to find a way. I'll have to maybe get a better charting software for the moment. But really, I don't use this a lot. It's just for where are we now versus where were we. And of course, you can access a couple of years of financial data from here: cash flow, balance sheet, income statement. Really useful. Not all of these that are in this sheet I've chosen myself. A lot of them I have pulled from other places, which I'll go through shortly. So one of the places I do grab ideas for investments or potential investments is screeners on TradingView. So if you just go to product screener stocks, because I'm in the UK, I only really want to buy stocks from the UK at the moment, just because that's where my brokerage is. Makes life a lot easier when I can actually get hold of them rather than opening a different account. Again, I'm in the learning phase at the moment, so I'm in no rush to buy everything and anything from all around the world. It's generally set market cap quite low, so set it from maybe 50 million up to 2 billion. Again, just trying to find those equities that aren't going to go out of business in the short term, but obviously aren't surveyed by the wider market. What else do we go for? Normally, return on assets as a percent. If we can get it as positive. And generally, what I'm really looking for is something that's not going to go bust. Really keen on companies that don't go bust, would you believe it? And debt seems to be a pretty reliable indicator. Again, there are no completely reliable indicators, let's be realistic, but this is something that's generally made me pretty happy all the time I've been with it. So just pick a few. Serco Group, I've definitely heard of them. I generally want to see where they are, where they have been in the last 5 years. If they're at a peak, I'm not generally that interested. That doesn't mean there's not still more value to gain from them, but with my level of skill, it's unlikely to happen. So again, this looks quite a nice opportunity. I do like to see when they last peaked, to see what's going on there. I mean, generally 2021 was an absurd year for stocks all around the world from all different places. So if I like the look of something, if it looks lower than it was with potential, I generally pull it in. Can't see it here. So it should be in London. Can't see it. So let's pull one that's gonna play nice. So one of the other things I'm really interested in, one of the other filters I use is generally sector. So I tend to avoid finance companies just because the current assets I've not really found to be trustworthy, based on either leverageness or just how they're set up. Just going to remove that filter for the moment, see what we can get. I was looking at these a couple of months ago. These are actually one of the first ones I ever looked at. I'm not sure what happened. There you go. Forward L. So just a quick view. Oh, sugar. I really should have gone for them at the time. I think I looked about 2 months ago when I started. Yeah. Well, I really did mess up there. Okay, that's fine. Let's have a look at the chart properly. Those charts you see on that summary page are always really skewed. Oh, that's what you get for not trusting your conviction, I suppose. Okay, so something like a 20% jump. Fine, I deserve that. Okay, so this one looks like it's at a peak for where it was in the last kind of couple of years, so I'll try a few more. Let's try this Geron. Cool, there you go. Try SC. Again, at a peak. There you go. Let's have a look at Travis Perkins. We know that one. Where is it relative to where it was 5 years ago? It's a bit in the floor. Cool. So let's pull that up on. Try that one again. Let's get it on London Stock Exchange. That's where we'll be buying it from. So over the last 5 years, it's definitely kind of low. Again, low to 2001. So take that with a pinch of salt. God, that was a time to be alive. Okay, so we are where we are. It's below half that price. We've got immediate kind of news here, which is always pretty useful. Normally go straight to free cash flow and just see where that is based where it was. So over the last 3 years, it's steadily decreased. Sorry, 4 years, not 3. So yeah, pretty unattractive proposition. Again, that's where some of these can come from. So I'd leave it for the moment. What we generally want to do also is have a look at kind of long-term debt as well, see how that's behaving. So it's come down, it's fluctuated. I really hate the down and the up. It does make it pretty hard to make a decision. Looking at kind of assets and liabilities, yeah, it's kind of, we've got a ratio below 1. So yeah, I'd consider that. Okay, so let's bring that into the universe sheet. This is generally what I do. Still a bit clunky, to be honest. So that's kind of what I generally do, and then just get the ticker there. So the way I'm doing it at the moment, and it really isn't the best way, and I know it's not the best way, is to have ticker, name, and then kind of link to Google Finance, industry, price change from when I inserted it. The trouble with doing it this horrible clunky way is that I'm using Google Sheets to get data and Yahoo Finance to get information. So if I want to put it in as Google Finance, I need to use the prefix of LON for London. So I can do that and then, drag down and do something I'll show you in a minute. But to get Yahoo Finance, unfortunately, I do have a kind of autofill bit here that pulls tickers from that column, but it doesn't work. So in this case, I'll have to use the manual tpk, .l, and that will then link to Travis Perkins there, as you can see. While I'm here with you, I'll just quickly go to profile, so sector, we want as industrials, and industry, building products and equipment. Okay, so that's not my only interest at the moment in the kind of building trade, which I'll show you in a second. What I've got in this column is actually price change from insertion. So what I generally do is just copy that one down. However, I'll show you what I've got first, so it'll make more sense what I'm doing. So we've kind of just got a percentage difference formula here, but to get these kind of manual inserts, we have to just get that price on its own. So in this case, it's 826 pence. So minus 826 over 826 multiplied, try again, multiplied by 100. And there you go. It's got percentage difference is 0 because we're now 7:39 at night and the market's closed. At one point when I was only dealing with kind of US equities, I did have like a PE change, but I don't really use that anymore. Probably just get rid of it. It just became a bit of faff and kind of an unnecessary thing to do based on the tickers there. I got a bit bored. One of the other things I've been doing is putting small notes. These notes are nothing. There should be more. They do exist elsewhere, but I've not really bothered with them for the moment. And you will see occasionally I've missed out, like the industry and the price change. Yeah, not amazingly worried about that. Again, it's all a bit of a work in progress. Okay, so that's generally the process. And then if I'm really bored, I do actually get quite a lot of stuff from Reddit. So value investing is quite a nice one. It's relatively friendly as long as you're not chucking around memes. Generally a few things, so these will always come up. So I'll naturally just go have a little look around. There you go. Chuck these straight in. Again, I'm not going to get the ones that aren't on the London Stock Exchange. However, there you go. Here's one. Quick view at 5 year. That thing is just banging straight up. Not really going to go for that. But again, that's a really nice place to get things from. Have they just been listed? Have I missed something? No, they've not just been listed. Okay, well, it is what it is. Doesn't want to give me financials. Fine, but yeah, you can obviously pull that data up. These are, just get these and just chuck them in your chuck them in the universe sheet, come back to them later. Like, here's examples of ones I've looked at. This one I think I pulled from Reddit, a couple of others. Yeah, there's all sorts. Vital Farms is one I pulled in about 2 weeks ago. In that time, it's gone up 41%. Again, you can't go through all of them. You just can't. You'll go mad. And some of them will drop, some will go up. But yeah, it is what it is. One of the things I did the other day, actually, was I did have a little look at the average return based on all the ones I'd found and thrown in. Hang on. Just overcome those little gaps. Cool, yes. The average return of just randomly picking things that people had chucked on Reddit or I'd found myself was about 6%. So I thought it was fun for a couple of weeks' work. Right, so I've got a few of the sheets. I've got sectors industries, which haven't filled out, but it's just links to sector, and not sector analysis, sector values and sector performance on Yahoo. I've got a bit of a free cash flow analysis. Need to check it for bugs, but yeah, I've thrown it a few times. It's made some purchases and based off it. Portfolio, there are things I'm currently invested in. Like I say, I've only just started, so I've been in 2 months. So I've only been buying things from the UK, and I'm only putting in about 100 quid a month, because that's just what the budget allows for at the moment. Times are hard, and I've got kids, so saving for other things as well. So I'm just chucking in small amounts of money. I'm just considering this a bit of tuition, really. If you don't bet big and you don't lose much, it's not too painful. Okay, so 2 things I've gone for are Persimmon, which is a home builder. It's actually don't you say it, but a discount home builder. Price is typically 20% below average. They don't make great homes, but they do make them consistently. People will buy them. If people don't want to buy them, housing associations will buy them. So they've got kind of a distinct competitive advantage there. Obviously, there's always a risk going for the bottom end of the market, but that's what it is. And the other one is Card Factory. So Card Factory is a kind of cheaper alternative to places like Clinton's in the UK. I've actually got some of their cards in my drawer. They're something like £2 for 10 when you can buy, standard cards for, I don't know, maybe up to a fiver, which is just awful. So yeah, the kind of thesis there is the balance statement looks good. They've been paying off debt since COVID. They are kind of steadily increasing cash flows, and even if there is a kind of recessionary period ahead, I think people are going to go to them more than they are going to go to someone like Clinton, who's charging much, much more. We use them all the time. People throw cards away, they don't really care. So people are going to buy them. Yeah, I'm happy with it. Again, we're down 3% in, I don't know, over a week or so, but I generally consider anything less than 10% at these share price levels just noise. So I'm not really that bothered. So that's where we are. That's where I am now. Hopefully I'll be able to kind of update you in a couple of weeks on some of the things I'm doing, some of the other things I've seen. And obviously, if you have any comments or feedback, do let me know, or anything you'd like to see.